Well, you can see just how heated, how high stakes this whole Brexit debate has come. 72 hours, Thursday, we're going to know the result. To unpack some of the market machinations the last little while and what we might expect Thursday from global markets and investing, let's go to a regular on this show. He's David Kaufman, President and CEO of Westcourt Capital. David, always great to have you on the program.
Good to be back. Thank you.
So let's talk about what we've seen in markets up to this point. Most notably, last week, German 10-year bonds going negative, the first time ever. And this is a security that's traded back to the 19th century. What does that say to you? Is this Brexit vote driving global anxiety, or is it just another factor on top of a somewhat anxious international mood in markets right now?
Well, there's no doubt that since the financial crisis, Europe generally not so much Germany, but Europe generally has continued to struggle. I mean, they're still barely back to where they were before the crisis. And so every time you add just a little dose of uncertainty into the markets, you see people rushing for, safer harbors, which includes, of course, bonds. Today, on the other side, you see all of a sudden all of the bookies, and it is legal to gamble in Britain, all of the bookies are saying that there's a better than 60% chance of a stay vote, and all of a sudden you see the markets buoyed and they're up 3%. And that kind of volatility is not something you would normally see were it not for the fact that I think that the pundits who claim that this is a very major decision from the point of view of investing results over the medium and long term are right.
Yeah. So let's say the bookies are right, and we're going to see a Remain vote. Does this issue then just go away? I guess what's kind of frustrating about markets is we get obsessed about this Brexit, Brexit, Brexit. Now Brexit, Brexit, Brexit. Who knows what's next? And the events happen, and then we go away, and then we get freaked out all over again.
Yeah, it's interesting. First of all, the one thing that we can never know, because markets, the invisible hand of Adam Smith is invisible. So we never know exactly what's baked into the pie. Okay. So one thing we do know is that after Grexit wasn't really Grexit, that didn't mean that everything was solved in Greece. Oh. And actually, you saw many concessions, from the hard left-wing government that was elected in Greece after the fact, where they said, we kind of would like to kind of keep this economic policy thing going. And I think that what will happen is that, if nothing else, this debate has engendered real legitimate concerns about sovereignty issues with respect to England, to Great Britain, and that I think we will see a little bit of a reshaping of how that relationship with the Eurozone looks. I mean, it's already a little bit different. They still have the pound and they still have sovereignty in certain areas. I believe that once things settle down and once the immigration part gets maybe pulled out of the picture a little bit, they can return to monetary and fiscal policy and security policy. But with the immigration policy weighing so heavily on top of it, I think markets are going to continue to be very volatile.
Now, Westcourt Capital, you're often looking at alternative asset classes for investors. What if your thesis, looking at Brexit, looking at Trump, is basically that the world isn't going to hell in a handbasket, but there is a reaction here to globalization. There's a reaction against what it was supposed to promise but failed to deliver. What if the future is less trade, not more? How do you invest in that kind of world?
How do you invest in xenophobic isolationism? Well, I suppose that if you...
short Europe, I guess?
Yeah,
I don't know, long the U.S.?
I'll tell you what, don't bet against the Fed, is what you say in the U.S. Don't bet against the European Central Bank either. The one thing that we saw in the U.S. is that against every headwind that you could possibly imagine following the crisis, as long as the Fed was there easing, the markets went up, up, and up. And you've recently seen the same thing happen in Europe. And so while I am loath to predict the direction of markets in the short term, I certainly believe, especially with Great Britain being part of the Eurozone, that you'll see that Europe over time will continue to produce goods that are purchased by others and have a viable market. Some people would say, well, I guess I got to go buy gold. Well, that was great last week, not so much this week. We don't favor the idea about buying gold as an insurance policy against uncertainty, because gold is there are a lot of gold bugs out there, and I'm going to get a lot of mail about this, but at times when you most need it, when you need it to be your friend, it often abandons you. During the financial crisis, gold got plummeted, and many crises since then, gold is not there to help you when you need it most. U.S. dollars, they've been a pretty good place to bet when you think that the world is going to hell in a handbasket.
David Kaufman, Westcourt Capital, always great to have you on the show. Terrific analysis, terrific insight. If people want to find your website, where do they go?
WestcourtCapital.com. Thank you.
We're going to do it again, David.